Hello, fellow traders. 'Tis I, the Rumpled One. Our topic: more horizontal lines. Now, those of you who have been following me for maybe just a few days or weeks, or maybe months or years, know one thing about me is I stand behind or stand for using horizontal lines in trading. Trading is simple. It's pretty much binary: up, down, buy, sell, profit, loss. It's simple. Why others like to confuse and confound and complicate trading, I don't know. I really don't. I take a lot of flack for it, but that's okay. Because if you don't stand for something, if you don't believe in something, then you'll fall for anything. And many traders fall for the squiggly line people. I mean, you just look at the forums. There's just so many threads out there talking about squiggly lines and saying how simple their method is and doing analysis on moving average crosses. Bottom line is, if they worked, then there'd probably be no market. I just don't understand why people pursue these things. Well, actually, I do know why, because of the way the brain works, and we talk about that in the psychology of trading. But let's stay on today's topic, which is horizontal lines. Here's a simple chart using one of my indicators that plots horizontal lines. And these lines are pretty basic, pretty simple. We've got the daily open, the daily high, the daily low, the previous daily low, previous daily high. We've got some pivots in there, even though personally I usually don't use pivots, but I know some people like them. And then we've got the ATR zone between ATR 3 and 14, where 3 was the minimum, 14 was the max, where the indicator loops from, I think, between 2 and 14 or 2 and 15, looking for the min val and max val and creating an ATR zone rather than just having any one line. Because at least here you know, well, there's still some ATR left once it gets in the zone, but once it exits the zone, then you know it's really pushing it and you want to look for a reversal. And you can see the price action here. The euro opened, it went up a bit, tested the previous day's high, back down through the open, went through the weekly close from last week, went through the weekly open, turned right back around and went back up. As some of you know, I like the weekly open trades. They usually pay off in some nice pips here. Once again, going long or short, you could have collected about 5 pips on these trades. This is a H1 chart trading with the candle color. And then you see here, we went through the daily pivot, back through the daily open, through yesterday's high, created a new high, I believe, on this candle, and price retraced, and now it's just sitting there. But the simple thing, the thing to understand, is that by having these horizontal lines on the chart, the only ones that are going to move will be the daily low and the daily high. Everything else is going to stay fixed. And so when price comes to a point, you can take the trade in the direction of the cross. So then you'll be trading away from that line. And that's what a lot of people don't understand, is that they want to put squiggly line indicators on here and make it complex and complicated when there's no need for that. This is just a simple trading based on what you see. You don't need indicators to tell you is price going up or down. You can see it with your own 2 eyes. And that's why I always tell traders, trade what you see. If you look at this chart and you can't see where to trade or how to trade, then you can't trade it. So don't even attempt it. It's that simple. But if you can see, saying, wow, if I use that weekly open and if I go short when when price is moving down, or I go long when price is moving up at that weekly open, I can see I can make money there. It's that simple. Or you can say, well, if price is testing the previous high, well, there's a possible trade here. Maybe you got stopped out here. Maybe you took profit. Bottom line is, nothing's going to work all the time. Otherwise, the market would cease to exist. It's just that simple. But you can see here, you can take these trades. You should be able to take these trades with confidence, knowing that there is a potential to make money. I mean, sometimes you might not want to take the first test or two at the line. You say, I'll wait for the third time it tests the line. Then I'll enter the trade. So for example here, when price went up and came back down to the daily open, you don't take the first one, you don't take the second one, you don't take the third one, maybe you take the fourth one. And as you can see here, would have been profitable. That's up to you to decide. You could take each and every trade, or you can take the ones you think will yield profit. And of course, you would never take a trade that you think would yield a loss. Once again, these are just simple lines that don't move. The previous day's midpoint is another line. One of my favorite trades of all time. You can see here there's usually price action around that midpoint. Price doesn't linger around the previous day's midpoint. Right there. So if it crosses down, you go short. And that would only been worth maybe 3 pips to you. Depending on your broker, depending on your spread, you might have only gotten a pip or 2 out of it. You would have had to react quickly. Because see here, price went the other way. But in that case, that would have been worth 10 or 11 pips. And see, once again here, if you'd gone short, that would probably have been a loss. Then if you go long, once again, maybe a couple of pips. So you see, these aren't 100% guaranteed trades. There are no 100% guaranteed trades. Certain things will happen, such as price will range, and that's why we look at the average true range here to see if price does range up to those points. And once again, for the weekly and the monthly, we also have these ranges. You see? So if you're a longer term trader, maybe you put a trade on at the beginning of the month and you check it, the beginning of each week. You just let price range, you pick your targets accordingly. So fellow traders, once again, horizontal lines. It's very simple to trade using horizontal lines. If you have any questions, comments, feel free to reply on YouTube or on the trading forum. I appreciate you guys watching and listening. And if you have any questions, make sure they're specific, because if you just say, I don't understand, well, I don't know how to help you if that's all you say is you don't understand. Ask me something specific so I can give you a specific answer. As Anthony Robbins says, if you want better answers, ask better questions. And as I say, it's not what you trade, it's how you trade it. TheRumpledOne signing off.